Hi, this is Randy Crabtree, host of the Unique CPA podcast and partner at Trimerit Specialty Tax Professionals. Just thrilled to be here to announce that we are starting this YouTube channel where we're going to be talking about tax topics that are important to you. And we're going to start today with 174 R&D expense capitalization rules. So this is an extremely important area that we need to talk about because I'm not seeing a lot of discussion happening on these new 174 rules. And let me give you a little bit of background. So 174 defines R&D expenses. In the Tax Cut and Jobs Act that was defined at the end of 2017, there was a provision in there that said, starting January 1st of 2022, we are no longer going to be able to deduct R&D expenses as incurred. What we're going to have to do is capitalize those and amortize them over 5 years. This is a big deal. Since 1950s, we've been able to expense R&D expenses as incurred simply by expensing them on the tax return the first year you have incurred R&D expenses. It's always been written off. We've always done it. No longer are we allowed to do that. Because of the Tax Cut and Jobs Act bill that defined this, kicked it down the road till January 1st of 2022, we're going to have to capitalize expenses. We actually were under the assumption for the last 4+ years that this would go away, that this wouldn't stay part of the law. At a minimum, get pushed down the road further until we would have to capitalize 5 years down the road. And that was actually proposed in the Build Back Better bill. The Build Back Better bill said, okay, let's take this rule and let's delay it another 4 or 5 years. Unfortunately, we all know the Build Back Better bill hasn't gone anywhere, and at this point, it's not going to go anywhere. We live in a point in time right now where R&D expenses have to be capitalized. So what does that mean? Well, that means that we're going to have to, as tax preparers, as tax professionals, you're going to have to look at your client base and see who has R&D expenses. Most of your clients don't even realize they have R&D expenses. They don't realize what qualifies under Code Section 174. And so you're going to have to help them through that process now. And you're going to have to look at that, and you're going to have to identify these, and you're going to have to capitalize it. This is a big deal when it comes to tax return preparation time and tax planning time. But really, we have to be thinking about this for the 2022 tax year right now. So as an example, let's look at a $7 million manufacturer. Not a large business, but a nice sized business. A $7 million manufacturer could very well have $1 million of R&D expenses. $1 million of expenses that qualify under Section 174. So that $1 million of expenses let's assume this is due to year 2022, in this current year, we're going to have to amortize that. We're going to have to capitalize the $1 million. We're going to amortize that. And this is a mid-year convention when we're looking at amortization for this. And so if we're in the very first year, we don't get a 20% write-off. We only get a 10% write-off. So we're going to write off $100,000 of those $1 million R&D expenses in the year 2022. That means that small $7 million manufacturer is going to have an increase in taxable income of $900,000 in the year 2022. And then going forward, we're going to be amortizing $200,000 the next 4 years, and then the last $100,000 in that 6th year. So after that 6 years, we're back to whole. But that's a big tax effect. That's something we have to be planning for today. That's something when we're working with this client now, doing tax planning, and tax planning for these clients has to start today. We're not waiting until the 4th quarter with this because this is a huge potential tax hit. And I mentioned manufacturer. Manufacturers are not the only one that are R&D expenses. I mean, your CPA firm could have R&D expenses if you were doing some software development. And so therefore, this is going to be hidden in places you don't even expect it. And what I've heard people say is, well, we're not going to take an R&D tax credit, which is completely separate from the R&D expenses. R&D expenses is defined under Code Section 174. R&D credit is defined under Code Section 41. Now, the expenses that qualify for Code Section 41 have to qualify under 174. So they're related, but they're two different code sections that deal with this. But what I've heard some taxpayers say, and even some tax preparers, is, well, my client doesn't want to take the R&D tax credit because they don't want to identify the fact that they have R&D expenses going forward. So this way they can just keep expensing everything as they've done in the past. That's not acceptable. That is not allowed. Just because I don't identify expenses as 174 doesn't mean they don't exist. The fact they're not called out separately on the tax return does not mean they don't exist. And what happens in that situation, if you were to get audited and somebody had done this, you have taxpayer penalties. You are putting yourself at risk at significant tax preparer penalties, 6694, and you don't want to deal with that. Those are not penalties you want to deal with. So just be aware that this is not something we can ignore. If your client has R&D expenses and a client doesn't know how to identify those, you are going to have to help them, and you're going to have to start to capitalize these. Now, that being said, we are hoping that something happens in the year 2022 which will get rid of this. There are discussions happening in DC right now, but you know what? We're at the mercy of Congress with this, and who knows what will happen this year. We are in an election year. It may be tough to get things done, and so I'm a little concerned that this will not change before the end of the year. That being said, I just wanted to let you know this exists. This is not something to ignore. You have to pay attention to this because this could be a major hit to a lot of your clients, and you don't want to be surprised with additional taxes at the end of the year. For more information on this or other tax topics we're going to be sharing, please like and subscribe to our YouTube channel.